Josh and Brian here with the Leonhardt Team, Coldwell Banker Realty. We sell around 150 homes a year. And is the 23-year peak of the interest rate going to crash the Minnesota real estate market?
That's an important question to ask right now.
It
I
is.
think as you look throughout history and realizing that when interest rates go up, the housing market goes down.
Right.
The prices, essentially. Right.
Or slow way down.
Yeah, exactly. But typically, that is the thing. And I think the common theme is you realize that for every interest rate you go up, you reduce your purchasing power by 10%.
Yep.
So in the past year and a half, going from 3% to 8%,
Yep.
theoretically reduces everybody's purchasing power by nearly, that would be 50%.
Yes.
That is, and now you realize, is what you got pre-approved for a year and a half ago or 2 years ago.
Pre-approved for 300, you're now pre-approved for 150 most likely, or somewhere around there, unless something else has changed in your financing.
So that would make sense to go, okay, this housing market prices have to go down. They're going to go down. Why aren't we seeing that yet?
Right. Because we have a lack of inventory yet. That is, there's still buyers out there and they're willing to purchase in this market with these rates. We just had a team member that their client did a 10-year ARM on their purchase. They have a house to sell. They're going to sell their house. They bought this one on a 10-year ARM. So there's options out there to refi down the road when rates do go down. I mean, the pent-up demand is still there. Buyers are still buying houses. Sellers still aren't selling because, the other edge of, do I want to sell, leave my 3% and go to 8%? So,
yeah, and I think it's knowing that too of going, we can go back a little while, right, to kind of see how an interest rate changed, because we are still, we've gone up about another percentage point, right? We're at a little over 8 now, which is a little bit higher than what we've been most of the year, around that 6.5 to 7 for the most part for most of the year. Now we've ticked up a little bit again, but I think when we look at what happened last fall, when we did the 3% in the spring, all the way to 7% in the fall is what happened, right? Is the housing market kind of just shut off.
Right.
Is buyers just stopped buying. Yep. They got really scared. There was so much negativity in the news and in the real estate market of what is going to happen. Prices have to go down. This is going to plummet. And then they just didn't.
Right.
Prices, I think, in the fall, they did get reduced quite a bit, for sellers just trying to get their houses off the market. And, some buyers that bought back then in that time are probably pretty lucky.
Right.
They did.
Right.
Really are,
yep.
Right? They got them when nobody else wanted to, and everybody else was scared, and everybody else left, and they all came back. Right. And they came back in the first part of January, February,
March, April.
They all came back.
Yep.
Right? They all came back. Prices started to get pushed again, right? Yep. It was a feeding frenzy for housing that was on the market. That was good, right? So we see that going, okay, what happened last time this happened? What happened last time when interest rates went up, like that, right? Yep. And now it's kind of, it's leveled out and gone up just a little bit as far as prices and everything. So I think it's that, the fear of the interest rate, but then the buyer's actual capability to go, hey, I have to do something, or, I had a new family member, I have a new baby on the way.
Right.
I need to get a place.
I'm tired of paying rent. My landlord keeps jacking my rent up on me. So
then does it make sense? Is that a bad decision? Is it a bad decision to buy in this market because interest rates are so high? And of course, what we're going to say, but also I think what makes the most sense is yes. You do.
Right.
If you can afford it,
correct.
It's always the number one question. Do you have a good reason to do this? Is your why strong enough to go, this is the problem I'm solving with the new house. I need to do this, and I want to do this, and I can afford it. Then it goes, all right. Fortunately, hopefully in the future, you will have a chance to reduce that payment. Even if it is a little bit higher right now, it shouldn't stay like that forever.
Correct.
As you're in your home for 5 years or 10 years, at some point, you're going to most likely be able to reduce down from an 8%. But does that mean you'll get down to 4? Does that mean you'll get down to that 3 again?
I don't think we'll ever see that again.
We may not, right? And I think don't bank on that. But also I think the other side of it is going, well, I'm going to wait until interest rates go down to buy a house. Well,
what's going to happen then?
You and, a million other people, when they do go down, are going to just flood the market. then what's going to happen to pricing?
Right.
If inventory is still low at that point, what kind of feeding frenzy are we going to have on our hands again?
Correct.
Right? You are going to be doing multiple offers, paying way over for the house just to be able to get it.
Yep.
So if anything in the silver lining of the interest rate hike is just the fact that that reduces the competition that you will have to getting a house.
If you can afford it and are comfortable with it now,
Yes.
do it now versus waiting, because waiting could be
Is not going to make it better.
catastrophic. You're going to lose equity gain because of the feeding frenzy. It's going to push the prices up. Yeah, sure, you're going to get a lower interest rate now, but you can refi and do that. So the stress level will be a lot less now because you can negotiate more now than we could in the spring, or we can when interest rates are lower.
Yeah. Moral of the story is do not wait for interest rates to go down. When you wait for that point to happen, more people are going to be in this market for sure, and it will be way more competitive. And everything that you got back essentially from rates being lower and your monthly payment being lower, you will lose out a fair amount of that most likely with what you'll have to do to get a house.
Right.
So don't wait if that's your only reason. Do not wait on interest rates. Also, do not wait on assuming that the housing market is going to go down.
Correct.
That is one of the worst mistakes I think people have made over the past decade.
Right.
You know, of going, I'm not going to buy until I get another crash.
And this still isn't the same market. We're not even close to the same market it was in 06, 07. I lived through that. It's a whole different. We've talked about that in other videos. That's, that was a lending crisis of not vetting these buyers. And I mean, that just.
And I think it's that point of being at least a little bit obvious to go, you don't want to buy in this market because you think it's a bad market to buy. But then the only way you're actually going to buy in what's a really good market for you is when that market is terrible and everybody else is afraid of it.
Right.
That ends up being the only time. So if you're afraid now, you want to take the time when the market is crashing and it is going down, that's when you're going to hop in. That sounds a little scary to me because that's your risk.
Right.
That's what happens.
Right.
But if you wait also until everybody else comes back in the market and the housing market is exploding and everything sounds great and you jump into it with everybody else, you really lose the advantage of it.
Right.
Moral of the story is don't wait for interest rates. It's not going to be what I think you expect it to be when they do go down. Want to see what your monthly payments would look like at a mortgage in this interest rate environment? Click the link below in the description to see more.